Hello, folks. This is Raj Sastry from Raj Option Trading. Today is April 11, 2021. I want to cover a quick segment and talk about strategies to selling put options or even to buy the stock outright. So, with that, what is a put option selling? When do we do it? So, seller of a put option will make money if the underlying stock increases in value. So seller of the put option also he has an obligation, he or she has an obligation to buy the stock at the strike price. So because of this obligation or because of taking risk, the seller of the put option will be paid a premium. So most of the people sell put options, to collect the premium, and some people also sell put options because they want to buy the stock at a lower price or a lower strike price. So with that, when do we sell put options? As a put option seller, you want the volatility to be high. So this is typically represented by IV rank or implied volatility rank. You want implied volatility rank to be high. And typically, you want the relative strength index or RSI to be relatively low because when the RSI is low, that means stock is oversold and it's got a good chance to bounce back. So, as a option seller, put option seller, you want the stock to bounce higher. So those are the two main things from a technical perspective. From a fundamental perspective, as an option seller, you want to make sure the company is rock solid, it's got good sales growth, and it's got a good gross margin. Those are the two things that I always look for. So that way you have good chance to make money by selling put options or even good chance to buy the stock knowing the stock that you're buying is a fundamentally strong company. So with that, let's go into a little more details. So this is the list of companies that we'll be talking about. I will not go into each and every company, but the way I pulled this list of companies is I wanted to make sure the IV rank is relatively high. So all these companies that you have here, IV rank is more than 50. And I want to also make sure there is I want to list out what the current RSI, because as an option seller or even as a buyer of the stock itself, you want the RSI to be a little bit lower. So you have a good entry point to buy the stock or even to sell the option, put option. And I want to make sure there is a good revenue growth. So that's why I always look for a sales growth in a 1 year time frame and a sales growth in a quarter over quarter time frame. And then I like to have a good gross margin. I want to make sure company makes money and nice gross margin. And also sometimes I look for institutional ownership, so that way a lot of these mutual fund companies and ETF companies are buying into this stock. And I also pay close attention to earnings rate. Typically, if you're an option seller around the earnings, you got to be careful because these earnings events can cause a lot of volatility increase. So that's why you got to be paying close attention to earnings rate and make sure you are careful here because selling options through the earnings is typically a little bit risky proposition unless you understand the stock very well. And I also want to see the 52-week off, how much stock is off of 52-week high. If it is off a lot and if it's showing some strength, signs of strength, that means there's a good chance it'll bounce off. But if it is a little bit close to 52-week high, then you got to be a little bit careful because stock can fall off a little bit. So those are the two things I also look for. Next is I look for the PS ratio. I want the valuation represented by price to sales ratio to be relatively lower. So, in this case, Fate Therapeutics a little bit high, and in case of 10x Genomics, it's a little bit high. And I also look at the stock and see how it's doing on a 5-day, 10-day, 1 month chart. So in this case of Futu Holdings, it's doing nicely. 5-day up, the 10-day up, 1 month up. So that tells me, hey, this stock is gaining some momentum. And in case of GSX Techedu here, the stock has sold off pretty hard in last 5 days, 15% off. This is mainly due to Archegos, the stock blowout, or a mutual fund, or a hedge fund blowout. So I think this is overdone at this point. This might bounce back from these levels. And also, as you scan through this, I got one more here. Fate Therapeutics sold off 4% here, and I also got a couple of stocks which are a little bit sold off. But normally, I pay close attention to 5-day, 10-day, 1 month, and see how much it's off of 52-week high. In addition to technicals like IV rank, RSI, fundamentals like sales growth or revenue growth. So with that, let's jump into a couple of stocks and see if it's a good time to sell put options on these stocks and take it from there. And for that, I will jump into Thinkorswim platform. And first, we'll look at Futu Holdings. Futu Holdings, stock is at 156, and earnings date is 5/13. It's a couple weeks out. So let's see if this is a good candidate. With that, let's jump into Futu Holdings, FUTU. So let's go into a chart here. So as you can look at the chart here, nice looking chart. Stock is has sold off earlier, and now it's trying to gain some momentum. As you can see here, stock is above 50-day moving average, 25-day moving average, and also 9-day moving average. That tells me stock is trending up. The trend is up, witnessed by exponential moving average crossovers. And now if you look at the volume itself, volume has stabilized a little bit. It increased after the sell off. Now it's stabilizing, which is a good sign. And if you look at the RSI, relative strength index is at a relatively lower point right now, 57. It in the past it has gone up to 80, 87, around those levels. So right now, I think it has more room to grow and get stronger. That's why I think this level is okay. Next, let's look at DMI, directional movement indicator. I always try to look at this and see if it makes sense. So in this case, in the DMI, the blue line here is above the red line, which tells me it's a bullish sign right now. Anytime the blue line crosses over red line and it's above red line, that indicates bulls are in control. And ADX itself is flat at this point, trying to go up a little bit. I would have liked it to be a little bit higher, but I take this given blue line is above red line. And next is IV, or implied wall. So here is a situation that and I'm not too comfortable with at this point. The pink line, which is historical implied volatility, is higher than actual implied volatility. So I would have liked this IV implied volatility to go up a little bit when I'm selling put option. In this scenario, IV is going down. So I'm not comfortable selling put option in this scenario. Even though IV rank is above 51, by looking at the range here, it's a little bit lower right now. I would like this blue line to go up a little bit, maybe above the historical IV. So that's why I'm not too comfortable selling a put option on Futu Holdings at this point. I would wait for this, this line, blue line, to go up a little bit and IV to raise a little bit. And from a check-in money flow perspective, as you can see here, it's nice uptrend here. Tells me the actual, the smart money is flowing into the stock, which is a good sign. So here, what do we do with Futu Holdings? With Futu Holdings, if you can buy stock outright if you want. It's a good time to buy stock given smart money is flowing into it and RSI, or relative strength index, is getting stronger. But with put options, if you want to take some risk, you could, but I would not recommend buying. But if you want to buy, this is how I would do. So if I go to Futu Holdings here, I will look at the option chain here. I would typically choose 47, 40 to 50 days out. 47 is good enough. So by looking here, Futu is 156. I would go somewhere near say 20, 30 delta in this scenario. I think this could be good enough. So I could do a 30 and 20 spread. I could sell a 30 130 120, something like this. So 140 130. There you go. So it's a $10 wide spread, and you're collecting $3.35 credit. So if you confirm and send here, as you can see here, your max profit is 335, your max loss is 665, and your buying power effect is 665. So this much money will be removed to as a collateral, and break-even price is 136. I think this is a good trade. If you want to sell put option, you could do like this, but I would wait to sell put option. I want to see IV rank, going up a little more, so that then it could be a good time to buy. I mean, good time to sell put option. But you could buy the stock outright because you don't need to worry about volatility in that scenario. So with that, let me delete this and let's look at next option, next idea. Next stock is GSX Techedu, and here stock price is 27, a low stock price as you can see here, and nice nice sales growth, and earnings is coming up 5 6. It's a couple of weeks out. Stock is battered down. It's so much down, 81% down for the year. With that, it also has a little bit higher short float as you can see here. So let's see what we can do with GSX. If I go to option chain here, GSX, and let's also go to the chart here. If you look at the chart for the GSX, stock has sold off couple times, sold off here, sold off over here, sold off, sold off. Now it's kind of stabilizing at this point. I could see some stabilization, and if I also go to a shorter term 5-day 5-minute chart here, you could see stock stabilizing here nicely, and even the blue line is trying to go up a little bit, which is a good sign. So at least in a shorter term chart, I see stock stabilizing, which is a good indication that stock has at least fallen off, and now trying to regain some strength. So now let's go back to 1 year chart here. So with this, what should we do? You can also try to see what has happened in the past earnings. Earnings here, stock is sideline went up. Earnings here, stock went up. Earnings here, stock sideline went up. So I think this stock, if it sells off before the earnings, typically it tries to go up, which is a good sign. And here, on the contrary, stock, after the earnings, stock went down. Typically, when stock is down during the earnings, there is a chance, if there's any positive news, stock can bounce back. So with that, let's go into option chain here and see what we can do. Given the stock is at $27, a low price, let's see what we can do here. So one thing you can do is really you could sell the put option outright. So if you want to sell put option outright, you could go right here to the 20 levels and sell a put option, collect $2.60, and if you confirm and send here, if the stock is above 17.40, you'll break even. You'll get $260, which is max profit. Your max loss is 1740, which kind of considers you'll be, if you buy the stock outright at $20, if you get assigned, you're already collecting 260. The difference is here, so this is the maximum risk. So if you're comfortable with this, you could sell the put option outright for GSX. If the stock falls below 20, you'd buy the stock at 20 and pay $2,000. You already collected 260, so you'll be paying 1740. So if you're not comfortable, selling put option outright, you could even do a spread here. You can try to do a 25-20 spread. So if you do 25-20 spread here, um, you will collect 70 cents here, which is $70. and your max loss is also a little bit less. If the stock stays above 24.30, you will make money. So this is another way. It's a low risk, low reward. Other option is to sell put option outright at 20 strike. So those are the two ideas. And now let's go back to PPT, PowerPoint here. We got a couple other ideas here. I will maybe look at one or two here. One more we look at is Vertex Pharmaceuticals. Stock price is 213 and IB rank is 67. Nice and high. RSI is 48. It's relatively low, which is what we want to see. And there is a good earnings, sales growth here. Nice gross margin. And earnings is 429 round the corner. And it's off 30% from 52-week high. So let's see what we can do with Vertex Pharmaceuticals. For that, let's go to option chain here. And if I go to the chart here, Vertex Pharma, chart, as you can see here, it's trying to stabilize, flatlining for most part from a stock chart perspective. If I make it a little bigger here, stock price is below 50-day moving average, below 25-day moving average. It's trying to bounce off of 9-day moving average slowly. So it's showing some strength at this point, even though it's sold off nicely. And from a on the balance volume perspective, it's trying to go up a little bit at this point. That's telling me people are buying into this stock. Historically, this is a very nice company, has done nicely. And RSI perspective, it's at a lower level. RSI can go as high as 60 here. Right now it's at 48. It has got more room to grow. From a DMI perspective, I see the blue line is above the red line, which is a good sign. It's a bullish at this point. And from an IV perspective, the implied volatility is higher than the historic volatility. At this point, I'm comfortable initiating a put option for this, selling a put option. And check-in money flow is telling me money is flowing into this stock. It's going up. Smart money is getting into this stock. So with that, with the implied volatility high, RSI low, stock is showing some sign of progress. RSI ticking up, check-in money flow ticking up, on the balance volume going up. I feel it's a good stock to sell put option. Or if you want to buy the stock outright, you could buy the stock outright also. So with that, let's go to option chain here. I would like to go 47 days out. I don't want too big risk here, because the moment you go beyond 50 days, there is a lot of risk, because there is a lot of time where stock can really do badly. So with that 47 days out, I would go to around 30 delta or so, which is 270 here. You could go here, or I think you could even be a little more aggressive with this stock here. 213, if you want to do even 200 and 190, you could do that too. Or if you want to do 195, 185, that'll give you a little bit less money. I would probably do 200, 190 for this. A little aggressive, but let's see. Okay, so with this spread, you are getting, you are taking a credit of $2.75, and your max loss is your max loss is 225. Let's see. Okay, it's a $5 spread we are doing. It's really a $5 spread. With this $5 spread, you're bringing in $2.75. Your max loss is 225. So I think it's a good position to be in. So you could, if the stock stays above 197, you get to keep your entire profit here. Or if you think you made good amount of money, maybe 50% or more, you could close out. You don't need to wait till expiration. So this is one way to play. Or you could even increase. You could increase the spread here by doing 190. If you do this 200 190, you will collect a little more premium, as you can see here. For collecting more premium, you will also be risking a little more. So your max loss now increased to 643. Your max profit also increased a little bit. Your break-even price is 196. This is the other way to play this, and you could earn a little more premium by doing a $10 wide spread. This is another way. So now let's look at one more stock. For that, let's look here closely. Twist Bioscience. If you look at Twist Bioscience, $132 stock. Nice sales growth here, and RSI IV rank is 59, RSI is 51, and it's 38% off of 52-week high. So that could be a good candidate. Earnings is coming 5-6. We have to watch out a little bit. So with that, let's go to Twist Bioscience TWST. So, and let's go to the chart here. So Twist Bioscience, same story here. Stock is trying to gain some momentum here. It crossed over a 9-day moving average, and crossed over 25-day moving average. Now it's trying to cross over the 50-day moving average. That's a good sign. It's basically crossing over from a shorter term moving average into longer term moving average. That's a good sign. And stock volume itself is on the balance, volume is getting higher. That tells me there is a momentum. People are buying into this company. RSI is picking up, so which is a good sign. So this company stock, this RSI can go as high as 70, as you can see here, 74. Right now it's at 51. More room to grow. And from a DMI perspective, the blue line just crossed the red line. It's a bullish crossover. I like to see these type of bullish crossovers. I would love to see ADX a little bit trending up. Maybe it will take some time to trend up, but I think it's okay given there is a bullish crossover. From a um, you know volatility perspective, the blue line here just crossed over the red line. So the actual volatility is higher than implied vol, which is a good sign. And from a check-in money flow perspective, smart money is flowing into the stock. The trend is upward here, which is good. And IV rank is 59.7. It's pretty good. I think we can make some premium, get some premium by selling put option. With that, let's go into option chain here. With this, you could even, with Twist Bioscience stock being down 38% or so, you could buy stock outright at this price and hold it for a long time. Or if you want to sell option premium or put option premium, you could go here. Stock is at 132. You could see, maybe around 30 delta or so, 28. There is no money here. One thing I'm noticing here is, there is a bid option spread is a little bit higher. Bid ask spread is a little higher. So let's go around delta 17, delta 20, delta 32, 120. So let's sell a 120, 110 spread. You could even do less also if you want to do 115. If you want to be conservative, you could do even 115, 110. That's also good. Let's see that 115, 110. So if you sell this spread, this is pretty comfortable. You are selling a 28 delta put, and you're buying back a 23 delta put, which is pretty good. So $5 wide spread, you're getting 170, $170. Your max loss is 330. Break even point is 113. This is one way to play. Stock has to go further down to hit your break even. So this is one way to play. If stock goes up, you can keep the money. If stock goes down up to 113, you still keep the money. So if you want to increase, your spread a little bit, you could do 115 and say 105 spread. If you do this, you'll get more money. You'll bring in $215, and you're also risking a little more money here, $785. Your break even is 112. This is the other way to play. If you want to take a little bit more risk to make a little more money, you could do this too. So that's another idea. Now let's go back and see what else we can do here. We looked at twist. Then we could even look at one of these stocks here. 23% off, 2013. How about QGEN here? Let's see if this works out or not. QGEN, let's go back here. So QGEN, let's go to this chart here. Yeah, this might work. Let's see. From a chart perspective, same story. I like to see the stock going up. It kind of crossed over, the 9-day, 25-day, 50-day moving average. On the balance volume is higher, trying to get to flat to lower at this point. RSI is picking up, so I'm not too comfortable with this. RSI is already a little bit higher. I would rather like to see RSI lower. With that, let's go back here and see if we can get one more. PPD, that's a good company. PPD is just off 2% from 52-week high. That may not be good enough. We can be a contrarian here and look at ChargePoint. Even though there is no sales growth, given the ChargePoint stock has fallen off badly, we could look at ChargePoint. Let's go to ChargePoint. So ChargePoint, as you can see here, stock has crossed 9-day moving average. It also crossed 25-day moving average. It's trying to bounce off of 25-day moving average at this point. And as you can see here, on the balance volume is stable. It went up, now stabilizing, and RSI is 50. It can go as high as 70 or even higher, 80, 90. And there is a bullish crossover. The blue line is above red line, which is good. And IV itself, I think I would have loved to see this a little bit higher, but probably I would wait on this one too. I would love to see this actual implied volatility going above the historic implied vol. At this point, not very comfortable, but if you want to sell, it's also okay. Given IV rank is 63.2 and stock is a little bit, taken a little bit beating. So with that, let's go to ChargePoint here. And option chain, I think 47 days is good enough. Stock price is at 27. And if you want to sell a put option outright, you could go around maybe right here 23. That's a good price. You'll get some money. It's 24 delta. You could sell outright and bring in $1.35 or $135. Your max loss is 2165 and your break even is 21.65. This is one idea, but if you don't want to take that much risk, which is 2165, you could do a spread here, stock price being at 27. You could try to sell a 25-20 spread. If you do something like this, you'll collect $1.86, and your risk is a little bit lower, 314. But you can be a little more conservative. I think 25 is too close to the price. You could do maybe go to 23 and 15. That's a better idea. So if you do something like this, and if stock comes to 23.15, this is a better idea. You collect $1.36, and your max loss is 664. Defined risk strategy, and you'll get some $136. Your break-even price is $21.64. As long as stock stays above $21.64, you'll break even. So this is another idea. So with that, what I would like you to do is, look at this chart here. All these stocks have got high IV rank. You could follow the same methodology. See if the current IV is above historic IV. See if the RSI is it too high for the stock, or is it at a lower level. And also look at the sales growth quarter over quarter, 1 year. I want that to be positive, and gross margin should be nice, positive. And if those criteria satisfy, you can go ahead and initiate a put option sale. And also, if you're a stock buyer, if you want to buy stock, you don't want to get into options, you could also look at same criteria. Ignore the IV of you could look at sales growth. You could see how much stock is off of 52-week high, and look at the gross margin. So with those, you can initiate even either a stock buying the stock outright, or selling put options. With that, thank you very much. Happy trading.